What's going on, guys? I hope you're doing well. Wow. I believe today was a pretty epic day for the Bears. I believe this single candle here was like 12%. Look at this fucking candle. Look at this bad boy. All right, let's check this out. Just this candle alone. Yeah, 12.4%. That's ridiculous. Okay, so I usually do intraday stuff, which is more so like on the 15-minute, 37-minute time frame, but given of what happened, I am gonna have to actually go macro here. All right, so why I was bullish was because we were in this falling wedge essentially for a while. And usually these break 60% of the time they break to the upside. And we were here at the inflection point. We're on the verge of breaking out. But yeah, that unfortunately was not the case. Now, what I'm actually I added a new tool here. This is an anchored VWAP. I use it sparingly, but sometimes, especially for macro tops and macro bottoms, it really helps to find support and resistance. So in this area, I was expecting rejections here, but eventual breaks to the upside for it. But no, actually, once we got this area, this was ultimately a key sign in the macro that the bulls were in trouble. Now, where I started getting concerned was not necessarily here. Actually, I thought we might have been able to bounce like in this area. This area was established as some form of support here. Let me get that right there, which is basically 28.8. But I knew pretty much like once we lost 29,000, which was the Fibonacci level. Actually, I think I have it here. Was it? Yes. I believe it was this. It was kind of like an intraday Fibonacci extension, which is like right here, right there. Let me change the color so you can see the difference. Okay. Basically, yeah, when we lost the 618 here as support, that's when I was not necessarily feeling bullish anymore. And this bearish engulfing candle was terrible. This bearish engulfing candle right below support right here, this white line, I'm going to turn it blue just so you know what I'm talking about. This blue line right here, I was kind of constituting this area as some form of support where we had a couple touch points. Ultimately, we weren't able to get it going. Pretty much, yeah, 28,696 around this area was kind of like my line in the sand due to the wicks. But yeah, I mean, once we were getting 4-hour candle closes below here, man, it was just really hard to be bullish at that point. I was expecting some form of a bounce around here, but we didn't even get it. We just got a straight bearish engulfing candle again. And then that's when all hell broke loose, and then we had this 12%er right here. But yeah, as far as this is concerned, I do feel like, we are bouncing, believe it or not. We had a complete retrace off of the lows right down here. If you had a long position and you did not take profit, you got stopped out, boy. Because we went all the way down pretty much to 24.5 area. Crazy stuff. Ultimately, though, I do feel like we're going to go lower. I'm sorry, but I do feel like we're going to go lower at this point. My thesis, my base case was we were going to eventually kind of like go sideways and down until we hit like this area, and then maybe get like a bounce and a breakout, and then we'll actually hit the 30Ks and stuff like that. We had a high probability of that happening, but there was a lot of bearish news coming out, and unfortunately, it was kind of showing itself up on price. So in a macro perspective, we did have this long-standing line of support now acting as resistance. Essentially, this is what we call a broadening ascending channel. We've been in this broadening ascending channel for some time now. Pretty much, I would make the argument that we started this broadening ascending officially kind of when it got identified was pretty much like in January of this year. This is huge. Losing the broadening ascending wedge, which is ultimately a bearish pattern, losing the support, huge, huge, huge loss for the bulls. Now I'm going to delete the orange Fibonacci levels, and we're just going to look straight at um, the current active pattern. Now, we have not gotten a back test. I will say that. We have not gotten a back test as resistance. We have the 618 here that essentially could be acting as support. My assumption is if we get a back test pretty much of this line, so let's say, you know, we have like a short-term pump, we get rejected and then come back down. I do feel like we're going to be going all the way down to the 382 level, maybe even to the 236 because of how severe and intense this downtrend is. We could realistically see, you know, 22K, 19.3K once again. You know, that's kind of my base case. Now, the thing about it, unfortunately, for ascending broadening wedge patterns is that usually they go all the way back down to where this pattern began, which is pretty much at you know, last year's lows, pretty much in November. So I honestly do think that we're going to be going choppy and down, choppy and down, choppy and down for the foreseeable future. I'm talking pretty much till the end of this year, maybe. And I'm sorry to say it, like I really thought we had maybe one more leg up, because given what the Fibonacci levels were kind of showing, and you know, showing this falling wedge pattern. You know, we had this, so we kind of had a bunch of opportunities here to get those pumps. So as you can see, we had kind of like a let me turn off the extensions. Hold on. Then let me turn it a different color. There it is. Okay, so we had a falling wedge right here, pretty much. We had another one pretty much like right here. Well, we had a descending broadening wedge, which is also a bullish pattern. So we had a couple. We had like a mini one right here. You know, so these wedges were predominantly working for a very long time. And it's unfortunate to see that the largest well, actually, no, this was a large one. This was one of the larger falling wedges actually break to the downside. It's uncommon for them to break to the downside, but ultimately, you know, that's what we got this round. It's very unfortunate, very unfortunate. I closed out my long and entered a short position pretty much right around here. Because of it was more so a scalp. I did not ride that 12% wave, I'll tell you that for sure. But yeah, I probably held it for like 5% with some leverage or something like that. But anyway, yeah, I mean, it sucks to see. I honestly was hoping to see a pump to maybe like in the 32 ranges, you know, to see 42K and then ultimately get the breakdown. But it looks like we're getting it sooner rather than later. Not gonna lie, I blame Michael Burry for this. If you're not familiar, Michael Burry is the big short guy. He opened up like a huge, yeah, like $1 billion short position on the S&P 500 and the QQQ, and since then we're getting nothing but down. And he's a pretty notorious trader, and there's a huge correlation to the stock market and crypto to this day. You know, eventually these markets will decouple, and you know, we'll get the better aspects of it. But at this time, you know, there is strong correlation. So when you have a huge whale open up like $1 billion short on the market, you know, that leads a lot of people to follow. And I think that's kind of what we saw today and yesterday, and pretty much since this area, pretty much since the top here at 31.8. Now there's going to be a lot of opportunities for shorts, and this is actually one of the reasons why I got into trading, because like what do you do when the price stops going up? You're just going to hold it, you're going to sell it, you know? So what happens here is that these are prime opportunities for lower term time frame pumps. Now, obviously, this stuff, technical analysis right now will not do you justice in the lower term time frames right now, given how volatile it's been. Let me see, do I have the ADX open? Yeah, let me go to the daily. Yeah, this is the daily chart. Let me go to the daily chart here. Daily volatility is spiked through the roof. Now, this indicator, when it crosses the 30 line and it pumps to the upside, that just means like swings are super intense. Now, it doesn't indicate direction. It just indicates strength in volatility. So right now, if you know what you're doing, you could definitely enjoy some juicy scalps and such. But at the end of the day, I would kind of stay out of the market until next week, I would say, just given like how ridiculous this is. Like look at this one candle. This happened in 15 minutes. Look at that in 11, almost 12% in 15 minutes. Oh my lord, that's real capitulation right there. That's real capitulation. Now the 618 did kind of act as like a support line. Ultimately, I think they're, from an intraday perspective, we could see back tests, but as you can see, look at these yellow X's right here. This indicates whale manipulation. Whale manipulation, I like to stay out of the market when these pop up, especially in higher term time frames. Like, I believed I told you about like the last episode that these yellow X's usually just show up on like the 1 minute, 2 minute, 3 minute, 5 minute. Maybe like you can see a bunch of them on the 1 minute. And it's like big whales, small whales, you see all types of manipulation that goes on. And I turned off my simple moving average, or my 9 and 21 exponential moving average and my 50 exponential. And this line here is the 200 exponential, I believe. Let me just double check. Hold on. So I'm going to go Market Liberator A. And yeah, okay, this is the 200 ribbon. So let me turn on support and let me turn on quant here. Let me turn on my indicators, see what's going on. So yeah, we're getting a tightening, so we are going to see a large move. Usually when these things tighten, kind of like this, we see huge moves after the fact, and usually it could go up or down or whatever, but they're intense. So we're kind of getting that again. Now we could go back up, we could go back down. Frankly, we have opportunities. We're kind of like literally in the middle of the range if you look at it, because okay, so let me go into a higher term time frame because we have topside. Realistically, the 786, you could make an argument that it correlates with the upward sloping resistance from the ascending broadening wedge pattern. But then we'll also have the 0.618. So we could literally go either way to backtest it and then come back down, or we could come back down to then come back up, backtest, and then continue down. It's all roads lead to the downside in this scenario. I hate to be the bearer of bad news, but unless I would say on a daily level, like unless we have like a bullish God candle break back above here and then kind of continue like just fake out mode, that would be my only kind of logical conclusion to us going to the 40Ks like I had initially thought. At this time, I mean, like I'm looking at 21.6K over time for sure. Maybe even looking at 19.3. I do feel like we're coming down more. And as you can see here, we had a daily candle close below the 200 exponential moving average. So let me just show you what happens when we close above the 200 exponential moving average. Okay, we closed right here. Okay, we had a bounce, choppiness, sideways, but then look how intense it got. If you just literally bought at a daily candle close, let's say like the first daily candle close, that you bought, which is over here, and you miraculously bought or sold the top, you would make 49.7%. So you could be a lazy ass. You could be a lazy ass. You could just like, once you see a daily candle close above the 200 exponential moving average, you know, you could just hold it for a month, a couple months, and you can make bank off of that. Maybe even a little bit of leverage, like a 3x leverage, 2x leverage, or whatever. Not financial advice, but you know, you could do stuff like that. Now, take a look at when the 200 exponential is lost. Similar, literally a similar candle. Okay, you know, for a couple days, pretty much, I would argue 23 days, we go sideways. Okay, and then we just start the descent. You know, we just start going hard to the downside. Obviously, you know, this was, you know, we kind of got like a bounce here. We did get some divergences that kind of kept this drive alive, so to speak. Some divergences here. But ultimately, yeah, we just went sideways and down. When you're below the 200 exponential moving average, those are times where you have to be thinking bear moves. When you're above the 200 exponential moving average, you got to be thinking bull moves. Okay? As of today's candle close, we confirmed a daily candle close below the 200 exponential moving average. Now we could go choppy. You know, we could go choppy for a month, and ultimately I would still be perma bear until we hit these Fibonacci levels. Sorry to say it, but you know, this is the macro in this bear cycle. I'm sorry, in this current cycle, post bear market, I would make an argument we're still in the bear market. You know, we could come back down. A lot of confluences around here. I would say, yeah, I would make an argument that 21.7 would be a good spot to look for longs. Right here. Hold on. There you go. Sorry, that took way longer than I thought. I would look for support there, or significant bounce there, and I would look there, a significant bounce there. So basically this zone. I do eventually think that price will come back down in this area. Who knows? I could be completely wrong. You know, the 618 could hold the support. It would break back above this ascending resistance line, and then we hit the 1618 Fibonacci level at 42,000. Personally, given what I'm seeing, price below the 200, price breaking outside of the ascending broadening wedge pattern, which is a confirmed bear pattern here, you know, I'm looking for shorts. You know, anytime until we're around this area, I'm looking for shorts. Like I'm gonna go to, say, the 24-minute time frame. I'm gonna zoom in, okay, and then I'm gonna look at my momentum oscillators, and I'd look at my augmented RSI here. I would look at my pretty much a market liberator B here, and start looking for red dots. You know, where the red dots at. Look at this money flow. Look at this terrible money flow. I mean, if you're in a bearish market, you're looking for the green. You're looking for green money flow, and then you're looking for a divergence and a red dot. If you can get all three of this is an ideal position. Ideal. If you're in a bear trend. Because if you open up your short right there, look what happens. Look what happens. You're above the 200 exponential, right? So that actually might not be as useful. You want to be below the 200 to confirm. So this might be wishful thinking. This is still a good short though. This is still a good short, but this is like the macro. This is like the macro top, right? So check this out. And actually, this would have been a great short. I missed this short actually. Let me see here, but look at this. if you had gotten, because it's peak money flow, you get a bearish divergence. The bearish divergences are indicated by these lines above the blue waves, and then you have like your dot, which is a sell signal, which has been right here. If you held, oh my god, if you held up until this point, you'd be up 11% in your short position. You could make an argument here. This would have been a better short position right here. Divergence, and you're kind of like getting rejected off the 200 exponential moving average. You kind of get this like pop to the upside. Let's say like right here. Yeah, you get a sell signal, confirmed sell signal right here. Yeah, and you come all the way down. Whee! 10%. So this is like if you're a swing trader, like you're holding your position for a couple days. Like for swing trading, I would not use leverage. For swing trading, I personally would just do spot positions or very, very low leverage, just because it can get really wonky. Especially with crypto, it's super volatile. And look at this. I mean, I haven't mentioned it yet, but look how many yellow X's that we see. Usually you do not see these like on higher term time frames. We saw these like huge whales were opening very, very, very big positions here. Hadn't seen, we saw that here, we saw that here, saw that right at support like bastards. Like they knew what they were doing. They knew this was a key level of support and they wanted to break it and they got it, hence the huge capitulation. Because a lot of these traders, a lot of these huge traders, they know what they're doing. So this was a pattern staring at you right in the face for months. This ascending broadening wedge. No, this was a pretty, I would say, a valid pattern up until, because you got your macro bottom here, you got your macro top, macro bottom. I would say a confirmed ascending broadening wedge is probably like right here. So literally to this day, you had 156 days to prepare for this breakout. So, on a macro outlook, and I really should have been doing more macro. I got really, because we were in a sideways market for a long time. I was doing a lot of scalps. Pretty much we were going sideways and down up until this point for 2 months almost. So I was just in my scalping mode. I was like, okay, we're in a large pattern. I can, sell the top, buy the bottom, kind of, do stuff like that. I could do mean reversion plays where essentially if I know the general trend of the market, then I could like buy when price is farthest away from the 200 exponential moving average. So for example, I would open shorts up here. I would, open longs relatively up here, and then I'd wait for price to tap the 200 and then sell. So that's mean reversion scalping. So there's all sorts of different strategies that you can do. It's kind of crazy, but anyway, I'm kind of like just ranting at this point. I hadn't seen a huge capitulation candle like this in a very long time, and I just wanted to jump in and share my thoughts. Anyway, I hope you thought this information was valuable. Take care, have a great rest of the night, and bye bye.